Good day. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up, and this is for Wednesday, the 27th of May, 2020, just at 6:30 p.m. Interesting day. So now we've got further Cold War issues taking place between China and the U.S. Not only is it on trade, this time it's going to be on rights going on. The House has passed a bill. The Senate has approved the bill to punish China for the treatment of certain Muslim groups within China. I don't know if the president will sign it or not. It's a rough one to sign. He's got his hands full, the president, in dealing with Hong Kong right behind it, because what's happening is as the People's Congress rolls on, remember I told you, it began last Saturday, as they roll on, they're reigning in control of Hong Kong. And at the end of the day, Hong Kong is part of China. Secretary of State Pompeo said as much today, and this is what we have to deal with. So the question is, how do you deal in trade? How do you deal in that? How do you help the citizens of Hong Kong? Because at the end of the day, they're not U.S. citizens. They're Hong Kong citizens. Will there be protests in the street? How far are they going to go with it? The police are much better prepared, and the army, for the protests this time than they were just months ago. So this is all well thought out on the Chinese part. Now the question is, what happens? There's a rotation going on in the marketplace, and the rotation has been going on in the different sectors of these, if you will, these spiders. The ETFs are easy enough to follow because you watch the futures markets and the stock indices, you get a feel. But the different sectors are seeing different action. Traders are now betting, if you will, that things will be better in travel, leisure, cinemas. I can go on. And as that's going on, they're starting to show their wear in purchases of those. So we're seeing the QQQ, the XLK stall a bit as the other markets are coming to life. And we can see, if we look at the daily chart of the SPDR XLK, the market is trying to fill a gap here. It got turned back today. It got as low as you can see as 94.33. Now to fill this gap that was left right here, you'd have to get to 93.49. And it wasn't able to do it. It missed it by $1. Is it going to be able to still fill it? Well, maybe. We'll see. You don't have to. I'm just saying what the market's trying to do. The pattern on the chart is very different. You, for a very long period of time since here, you kept making higher lows and higher highs. You broke that pattern today. With today's break, you took out a previous break low, so now you got a higher high, lower low. It doesn't mean you've ended anything, but it's certainly the first sign of fraying that is taking place in the stock indice. The market's trying to get back to the 18-day average of closes. That's 94.02. You got to 94.33 today. You can see where the resistance is. It's been the upper Bollinger Band, and the market is paying attention to that. At least I think it is. It's built into a lot of different algorithm programs. Artificial intelligence, it looks at it and says what's going on there. It depends how you write a program. I am not a computer code writer. Have I written code? You bet it. That I have, for sure. When you're looking at this charting software, guess who had a big hand in all this? Many years ago, I took off a year or so to help write a lot of the features that are in this charting software, and I've stayed with it my whole career, many decades. And the reason is that once you lay out the foundation, you can work further with it. So when I know what a swing line's doing, a Bollinger Band, I had to get involved in all this. And admittedly, it got easier as the years went on, and it's easier today still. But by doing that, you learn a lot. And I'm all about learning. You know, you can't learn enough. And I understand how a lot of this approaches and how it works. Like when you're losing an embedded reading, what does it do? Well, what's happening in this market is the market is on the cusp of losing it. If we look at yesterday's action, let me just come back here because I should be able to get, yeah, there you go. You were at 80.06 on this reading. And I said, be careful, you're probably going to lose that reading if the market's down intraday. And you did. The market fell all the way down here, and I watched it being lost. At the end of the day, the market was goosed up and closed, if you look, literally at the day's high. That kept this reading alive. But you're flirting with trying to lose it. The problem is the market's already getting pretty close to that 18-day average of closes, and that's all that I was looking for if it was lost. When I look at SMH, the market is overbought into a key resistance area that it keeps failing at, the upper Bollinger Band. But the definition of failing is interesting, because what the market has slowly done is it's made new highs and pushed on that upper band out a little bit, then it pulls back each time. You can see that, you see what it's done, and the 18-day average continues to be the line in the sand, what the market's looking at. In the industrial sector, now you've got two important events. Yesterday you closed outside of the upper Bollinger Band, the top part of the range, and you did it again today. As far as I'm concerned, that's a breakout. Now the breakout doesn't mean you have to just run, but it is a sign that I think that until you get back and can take out this low, guess what? This market's giving you the first indication it's upside, not downside, that this market wants to go. Same thing in the energy sector or not? Not. It didn't have two closes over that. It's fighting at the upper band. I think pros are taking money off the table here. I think they're more interested in getting back into the market on the XLI, and I think on the energy they're concerned right here. That does not mean I'm bearish. On QQQ, well, what are you doing? You're trying to lose the embedded reading. You haven't lost it. You've been able to hold on to it. Yesterday you tried to. You got to 80.12, came down intraday and lost it. I watched it, but then again, you finished very strong at the end of the day and kept it. All I'm looking for is the 18-day average of closes at this juncture anyways, but we'll see if more develops from here. The first weak signs in XLK and QQQ have asserted themselves. That's the important thing. In the emerging markets, well, I don't want to be short this market. It's number one, trying a breakout to the upside, 2 days over the upper Bollinger Band. You only stay outside of these bands 5% of the time. A rule of thumb that I use is each consecutive close outside of that takes away one of those 5 percentage points. So I now give the market a 97% chance of pulling back into the band, a 3% chance of staying out of it. But that doesn't mean I'm bearish. I'm not. Okay, I realize this market's trying to exercise strength. In the gold market, the opposite, lower highs, lower lows. That's a downtrend. The market's under the 18-day average of closes. The bias is therefore down, and momentum is pointing down. Right now, this market could be headed back to the lower Bollinger Band with resistance at 161.61. Even if the market gets up and over 163.47, it cannot reestablish an uptrend being defined as higher highs and higher lows. In GDX, the gold miners, lower highs, lower lows, but right where I would want to be out of this market. If you take a look at it, you're in a downtrend going home. Wherever that lower Bollinger Band number is, that's a number I'd pay pretty close attention to. You didn't quite get to it, or did you? Well, the low today's 32.54. Guess what the lower Bollinger Band is? That number's 32.63. You hit it, and I think the pros are gone from those shorts instantly. TLT acting a bit bearish but oversold, trying to probe the lower side here. Now, if you'll notice, we haven't seen any real rallies towards the upper Bollinger Band since the month of March. The market has spent most of its time in a downtrend, which means small rate increases are really taking place, and we've seen that. When you look at FXE, the market is trying to fight here at the 100-day average to get up to the upper Bollinger Band. It's overbought in an uptrend. Outside day up, a warning sign that it's failing would be taking out the lows of Wednesday. Until that's done, though, the trend up, look for resistance, the upper Bollinger Band. We have a lot to talk about at our company, and we do it through what we write and what we orally say. It's two different ways. Our website is not anything but a catalog of things we offer. All of our goodies are inside our charting software programs. We have one that is based, if you will, on if you want to use a web browser to trade or chart, both quotes, and the other, a Java-based package. I think you'll find both do an awful good job of presenting all the information that we've got be it written, be it the videos that we have, be it special government reports that come out, it's all there. So I guess we started this years ago because I got involved in writing this charting software maybe 30 years ago. And as I did so, I said, why would you want to keep your website where all your information is? A website should be no more than a catalog of the products that a firm offers, and the heart and soul should be inside the charting software, and that's right what we have. If you want to give it a try, simply go to our website. You'll see the free offerings. Give it a click. Same here. If you want to give that a try, click there. It'll take you there. I'll see you tomorrow. I'm Ira Epstein.